our webinar today on Investment Explorer. Thanks for joining me. And we'll get started in just one more minute. Wait for some more people to trickle in before I get started here. So it's cool. I see 34 people are here currently, waiting for a couple more to come in. Okay, let's go ahead and get started here, guys. Thanks a lot for joining me here. We are going to cover Investment Explorer today. So Investment Explorer, for those of you, I'm sure there's kind of a mixed bag out there. Some of you guys have used Investment Explorer in the past, and some of you guys are totally new to the tool. So I'm just going to start at the beginning and just going to talk about, what was the idea for creating this product. What does it do? How does it differentiate itself from our other products that we have at AirDNA? And then we'll dive right into the tool, looking about how to use it, how to get value from it. So just to get started here, so Investment Explorer. Investment Explorer was the first product that we created almost a year ago today. When we first started AirDNA, we really anticipated most of our customers to be Airbnb hosts that were just looking for some more insights on how to price their place and optimize their current vacation rental properties. But what we soon realized is that these hosts were having so much success in their current vacation rental properties that they were quickly looking to how to expand. Should they be expanding their properties in our local city? Should they be looking at neighboring cities or states? Or was there a place across the US that was just having astronomical returns and that they should be buying properties or renting out buildings in different markets across the US? We got so many of these questions that, I went to work in Tableau originally and trying to figure out how to build a dashboard. One of the problems with building that dashboard is that every single one of our inquiries and customers kind of had a different strategy about how they wanted to build their investment portfolio. Some people wanted to rent a whole building and have a bunch of studio and one-bedroom properties. Other people wanted to make sure that they're only looking within places that they could drive to. So if there was an emergency, they can get to that property and solve any problems. Other people had $10 million and just said, where's the best return? I want to invest in larger properties. I think group travel is the future. And I just want to know where the best, 4-bedroom plus properties are. So that was kind of the challenge, and just kind of creating a list of here's the top 10 places in America to buy a property. And so that was kind of the genesis of when Investment Explorer came to be. So Investment Explorer is really, a dashboard that you can interrogate to understand all of the different markets across the US, where the most money can be earned with short-term rentals across the US. So I am going to just jump right into the product now. And we will kind of dive right into Tennessee. And we will dig into it. So here's kind of the landing page for Investment Explorer. If you just sign up for a free account on our website, you can launch this tool and you can view the state of Tennessee for free. It's a pretty complicated product, and instead of trying to create a bunch of marketing text and training videos, we decided, hey, let's give away a state for free so people kind of go around and play in the tool. So anybody out there, create an account, you can come in here and see everything that I'm going to show today in your free account. So, coming right into this product, it's obviously, there's a lot of stuff going on, right? So let's just figure out, what are the main features of this product. First, top left-hand corner is the investment type. The best place to buy is different if you're trying to buy a home or trying to rent some property. So the first thing you got to think about is, am I looking to lease properties, or am I looking to buy properties, and make sure this is set to the right area. We're going to start out this analysis with a buy to rent investment analysis, but we might get into rent to rent options later. Here, the bedroom size is where to start. So the bedroom size is important, right? Because what we're trying to do with Investment Explorer is we're trying to merge what it costs to buy a property versus what that property is going to earn in the short-term rental market. Every single property value is different based off of the size, obviously. And so what we're really trying to do is create the most apples to apples comparison of what a one-bedroom property costs in a particular market and what a one-bedroom property is earning in a particular market. So, one of the kind of key components to Investment Explorer is really being able to, look at this kind of apples to apples comparisons for particular size units. So let's just set this to 2 bedrooms. It's kind of a random number, but lots of properties of 2-bedroom bedroom size across the US. It is important to note that Investment Explorer is only available in the US, and that is because real estate data of this nature this is the only place that we could find enough granular real estate data that is updated as often as it is in the US. We've had lots of requests for this to be, launched in the UK or Australia, and maybe at some point in time we'll do that. But it really is about the underlying real estate data, and the lack of that data in different countries is why it's not in any other markets currently. So the real estate data that we are pulling from here and what a property costs is from Zillow. We pull most of our data from Zillow, and we fill in some of the patches or some of the gaps in our real estate data with some other data sources like Atom Data and another data source that's slipping my mind at the moment. So those are some of the basics. Let's just jump into the tool and just kind of do a real world example. So all these circles here on the left-hand side, these are all cities. The size of that circle is representative of the size of that market. So there's 867 2-bedroom rentals that are of what we would like to call kind of full-time vacation rental properties. How do we define full-time? We define full-time by properties that have been rented at least 90 days over the course of the last year. We isolate those full-time properties to get the best understanding possible of what is the true earning potential of these vacation rental properties. If you just look at properties that are rented for 1 week or for a couple of weeks, they're not really looking to maximize their rates. They're not really looking to maximize their occupancy rates, so it can kind of skew the results of the overall market. So the way we decide to go about this analysis is really isolating more full-time rentals. So you can see in Nashville, for the entire city, all 2 bedrooms, the average daily rate is $211, occupancy rate 65%, and revenue potential. So revenue potential is one of the key metrics for Investment Explorer. It's what AirDNA has developed to understand what a property would earn as a full-time rental property. One of the biggest challenges in analyzing Airbnb rental properties is that some properties are available for rent for 3 months, some of them are available for 6 months, some of them are owner occupied for a couple months. And so to be able to normalize all properties, to say, what is this property actually worth? We've created revenue potential. And revenue potential basically takes what we think is the real rental activity, and then it adds in additional revenue based off of how much we think that property would have earned while it wasn't available for rent. So revenue potential is what we think is how we kind of normalize and annualize, what properties would earn in the vacation rental market. Hopefully for a lot of you guys out there, percentiles, aren't too complex, but just to cover it real quick, median is going to be what the 50th percentile property earns, and 90th percentile is going to be, what the 9th best property out of 10 is earning in this marketplace. So you can see of all 2-bedroom places, the best properties are earning $67,000 and the average property is earning $36,000. Obviously, it's a huge margin between the best performing properties and the average performing properties. That's kind of one of the insights that we hope to present to you guys here is how do you determine what should be a realistic expectation of how a property should earn? How do you kind of validate what the best properties are doing versus an average property. So anyway, so what I've done here is I selected on Nashville, sorry. So once I select on Nashville, then that populates this center chart here. This center chart is a separate triangle for every single zip code in the Nashville market. The size of the triangle, again, is the size of the market, and the location of the triangle is going to be how much money we think this property can earn in the short-term rental market. So let me dive into that a little bit. So on this x-axis here is the cost of properties in each of these markets. So you can see in 37208, it's a lower cost neighborhood in Nashville, and the most expensive area in Nashville is 37219, where the average two-bedroom home costs $412,000. And then on the y-axis is when we think about taking our Airbnb revenue and subtracting the annual mortgage cost, how much kind of gross potential profit is there? And that is before any sort of operating cost and management and furnishings and all that stuff is built in. So this is kind of gross profit before really any sort of operational costs. And let me just talk a bit about why we do that, right? You know, what we realize is that everybody in the vacation rental space has a very different operating model. Some people are very hands-on, doing cleanings themselves, you know, doing everything themselves, and they have a very nice margin, but obviously they're spending all their time managing those properties. Other people are using some sort of cleaning service and some sort of pricing service, but are also doing most of it themselves, you know, also good margins. And other people are outsourcing the whole thing for 40% of total revenue. So instead of us trying to figure out calculators and all this stuff, we're just kind of relaying what the top level number is, then you can kind of build in your own model with these high level estimates. So Nashville, so it looks like for a two-bedroom place in Nashville, this market 37219 looks to be kind of far and away an outlier and top performing marketplace. Even though it's the most expensive market in Nashville, it seems far and away to be making the most money in this market. So when I click on this zip code, well, let's just go through the pop-up real quick. So the pop-up then gives me the same data I had for the city, but for the zip code. It also shows me what the revenue potential is, like we saw for the city, but it adds in this gross profit, which then subtracts what the property value is in this market from the overall revenue. And it just gives you some more detail, price per square foot, year-over-year change, some data that's readily available from Zillow that we can kind of, you know, display here to kind of help you judge where this market's heading, where it's trended over time. So once I selected on that property, you can see in this map, you know, where all these properties are located. You can see all the dots here. So color of the dot is associated to occupancy. Size of the dot is associated to revenue. So these red properties here are going to have lower occupancy rates, 37.7, than these over here that have 85% occupancy. And the size is all about revenue. So this property, revenue 90,000, this property 100,000. So those are the sizes and colors of the dots. So what is this all telling me, right? So this is telling me this market is a really high performing market. It's showing me that there's a high concentration of properties in this area that are all doing extraordinarily well for being a two-bedroom property. It's showing me that these are all performing, you know, extremely well at this like $90,000 to $100,000 range for all these properties. Seems like kind of a blockbuster market. So what else can we learn about this market from this level, right? We can see, one, we could see how many different types of units are in this market. So we can see of all these listings here, 15 apartments, 12 lofts, 3 condominiums, there's no houses here. So we can see that these are all sort of high density multifamily listings here, kind of in the heart of Tennessee, right in the downtown area. We can also then see in the listing, you know, in a list of all the properties here down in this table, where are all the properties, what are the links to those properties, and how much are they all earning in a more of a tabular format. You could also then use this here to kind of click through to Airbnb and validate these listings. They're still available on the Airbnb site. some of these listings kind of come and go and disappear and reappear, but you should be able to find 70, 80% of these properties still live on the site. And then you should be able to kind of get in here and validate some of the numbers that we're saying about their nightly rates, charging 300 plus on the weekends, one something on the weekdays. It looks like this place is doing really, really well. So going back into the tool. So this is all, great, right? So it's a really easy way to look at the city, look at all the zip codes in that city, and then look at the property levels and look at which properties are doing great, and then drill into Airbnb and see firsthand these guys' calendars, how they're pricing, and really look at top performing properties and be able to back into the performance of those properties and why they're doing so well. One thing I kind of want to hit on real quick is that I get a lot of questions about, how is Investment Explorer different than Market Minder? Why would I use this versus use the Market Minder product? And the best way I like to explain that is that, Investment Explorer is a very broad but shallow analysis of all of the markets across the US. So it's great in kind of site location, identifying hot markets, identifying the best kind of sub-markets within cities to get into, but it doesn't have that kind of level of detail in historical ADR trends and historical seasonality and pricing, help. So it's a really great way to kind of go about site selection, kind of validate anywhere across the US what you think a property could earn in the short-term rental market, but it doesn't give you that level of depth of analysis that Market Minder would. So a lot of times people are using this to kind of select markets and then getting the full market intelligence by using Market Minder in combination with this. But there is kind of one level of details that we have added to this product to give you some historical context of how these markets are performing. So we've added the supply and demand. It's probably been 5 months now, but it is really the chart that helps you understand how these markets are trending. So for this market again, 37219, the blue bar is how many listings were available in each of these months. So you can see slowly but surely, this has been growing up, and where there was only maybe 30 listings October of last year, there's 53. So there's been, an 80% increase of properties in this marketplace. And that the RevPAR is growing at a very healthy pace, even with this addition of new properties. So what you're really hoping to see is that everything is, up and to the right, right? As more listings are added, properties are still earning more revenue, and that, demand is really keeping pace or outpacing the supply of new properties in this market. So you can see that the average 2-bedroom place in October did $7,500 in revenue in this marketplace, which is a pretty astronomical number for, a market like Tennessee. Demand is crazy, and properties are making a lot of good money in Tennessee. All right, so I'm going to stop talking for 1 second, and I'm going to poll you guys about kind of where I should dig a little bit deeper. I want to ask you guys, what is most interesting to you in terms of, are you guys looking to rent properties to re-rent them, or are you guys looking to buy properties to rent them on Airbnb or VRBO or whatever else you plan to rent them on? So far, it's a pretty even split, which isn't particularly helpful for me to direct the next portion of this. I think it might be helpful to jump into the leasing section, even though it's very, very similar, just to kind of go through another example. So you can see it's basically a tie. 17 people want to lease, 20 people want to buy. So thank you for that, by the way, guys. So let's go into the rent section real quick. I'm going to talk real quickly about one of the trends that I've seen when I've looked at this data over the past. Typically, what I found is that the most expensive markets out there to buy properties it's kind of intuitive. It's probably not, a huge watershed moment of insights here, but, the most expensive markets to buy homes are typically the best places to rent homes because the ratio of the rent to buy, it typically just makes a lot more sense to rent in those markets. And once you get into the cheaper markets or the second tier markets, typically buying is going to be your best option. But if you're in San Francisco or Los Angeles or one of these, more expensive markets, buying is almost never your best option. And this kind of lease arbitrage is going to be the best option for in terms of ROI. So let's just go into it real quick. Let's just look at a market in California. California is a monster market, so don't be scared of all of this analysis that will be popping up here in a second. There's hundreds of different rental markets here, and so one of the improvements that we're going to be making to InvestMix very soon is a lot more searchability. So being able to search for cities, being able to search for zip codes, instead of having this map navigation is something we're working on. We'll be launching in the next few weeks. Let's just take in Venice, California. Venice isn't a great example because there's only one zip code, I think, in Venice, but let's go to the greater Los Angeles area. So we can see in Los Angeles itself, we're looking at just studio and one-bedroom properties right now. And in Los Angeles, there are over 4,300 full-time studio and one-bedroom properties. We can see that there's a huge clustering of performance here, and that there are just only a few kind of outliers here. So this seems to be kind of this nice cluster, and this one, we'll see, with only 5 rentals might kind of be an anomaly, or there might be kind of one property that's crushing it, and it's just not really enough data to look at it. One of the reasons we've created this filter here is we wanted you to be able to filter out, maybe zip codes that don't have enough data to maybe be dependable in what the outcomes are here. So I've just kind of used this slider to kind of filter out markets that don't have enough properties to maybe be dependable. And so this looks like a great market here, 90041. So let's go ahead and do this. I love it when things time out during a demo. Let's just refresh the app real quick and we'll just jump back into it. Just give me one more second to get back into the marketplace. So we're back in here. We're back into this filter for 2030 properties. We're back in 90401. All right, so now we've identified where this area is. So this is kind of a hipster little neighborhood in LA. It's kind of like Eagle Rock area. It's kind of an up and coming neighborhood within the LA market. So this seems to be a great investment opportunity. You can look at what are the houses earning versus what the apartments are earning, and you can see that there is some pretty high performing properties in this market. It's not really as like bulging as Tennessee is. Like there's only, these properties are making $34,000 a year. When you're talking about what it costs to rent a property here, which is under $1,000, that return is still really, really good for this marketplace. We can look at supply and demand. It's not as exciting as a market. It's kind of flat, but still seems to be a very stable marketplace over the last year or so. I think we have one more poll that might help me kind of go to one more section. So we talked about a little bit about sorry, I'm sharing the poll results now, and I'm going to launch the next one here, hopefully. 1 second. All right, so one of the things I noticed when talking to a lot of investors, a lot of people have different ideas of what kind of property to invest in. A lot of people are thinking, Airbnb is truly competitive with hotels. Hotels sort of anchor prices in particular markets, and that by creating studio and one bedroom properties within a market that is across the street from a hotel, that is going to be your best bet and your most confident bet in getting into a market is to invest next to a hotel with a very hotel comparable sort of a unit. You know, a lot of other people think that 2 bedrooms make a lot of sense. The economics of a 2-bedroom is great, right? 2 hotel rooms cost you 200% more, but a 2-bedroom to rent costs you maybe 20 or 30% more. And there's this huge demand for people traveling as couples or with kids, and that's a kind of a marketplace that's really kind of underserved by the hotel industry. And there's kind of this whole other contingency, which is in this group travel is where all the money's at. And that's just where the economics make a ton of sense and where you can charge $1,000 ADRs. And that those are really kind of where the best, where the best returns are in those group travel markets. So those are kind of some of the kind of different thoughts I hear kind of floating out there when I'm talking to investors. So yeah, this is actually kind of a surprising result to me, that 50% of people, do think that 2-bedroom size unit is really the sweet spot. And I think that is, I think it's interesting, and I think it's something that I definitely thought about when I was investing in properties, is that, the cost to rent a 2-bedroom isn't significantly more than a 1-bedroom, but being able to get 3, 4 more people into a unit, is going to help me charge 50%, 60% more for that unit. And that this is kind of a niche that's really underserved by the hotel industry. So it's an interesting result. And so we can kind of continue the analysis real quick. I mean, it's kind of this 2-bedroom view of the world. So that is helpful to as many people out there as possible. Right now, I'm going to kind of just touch for a couple more minutes on the product itself. If you guys have any particular questions you want me to answer, now's a great time to kind of throw in some questions, and I will try to kind of do some Q&A here. I'm going to kind of hit on a couple finer points to the product real quick. So one thing I want to hit on is that, this is all sort of state-based analysis, right? So everything is subscribed to for the state level or for a country level. You can see how many properties are available for every single state here in this listing counts area. We are looking to add some new features to this product in the near future. And it's one of the reasons that I wanted to have this, this webinar is, it's a year old, this product. It's kind of been neglected a little bit as we've launched kind of our Market Minder product. And now we're going back to the drawing board and really thinking about product improvements here. And one of the main things from an investing standpoint is we really want to kind of throw in real-time real estate, things that are on the market in these different areas, in real time run our valuation models on those properties. So before I get into the Q&A, I did want to show you guys, for anybody who's not really aware of this, is Rentalizer. So Rentalizer is what we think kind of the future of our data from a real estate application is we want to, and we are really close to launching this globally, is put in any address across the US and we can come back with a estimate of what this property is going to earn in the short-term rental marketplace. Kind of our goals for the Investment Explorer into the future is really merging this Rentalizer, which is an AVM really for short-term rental properties, into that kind of high-level analytics tool, and then being able to really drill down into properties that are on the market, see how much we think that they could earn versus what they could cost, and being able to then help you guys more explicitly see kind of what the best places available for purchase in a marketplace are to buy. So did want to throw that out there real quick. All right, so I'm gonna look at some questions. Well, I'm just gonna start at the top. How accurate is the data? That is a good question. So yeah, this question, could take me the hour to answer itself. I think the process that we do at this company is very extensive about how we analyze this data. We look at every single property every single day, and we analyze the calendar of every property every day and look for changes to that property. We have developed a very sophisticated algorithm using tens of millions of real Airbnb reservations to understand exactly how properties are booked and be able to create an accurate algorithm. So, our data is extremely accurate. How do you actually quantify that? There are ways to do that about our precision. But in general, I'd say, there's about a 5% margin of error that we find at property level in this data. And I guess that's all I'll say about the accuracy for right now. We're really proud about the data. We're really a data first kind of company and product second. And we know we've been spending 3 years really refining the ways that we get this data to be as accurate as possible. So what AirDNA tool is best for identifying best rent-to-rent locations? Yeah, I think we covered that a little bit, is that this Investment Explorer is going to be the best place to look at the best places to rent and re-rent properties. I think it's important for anybody that hasn't looked at our blog post, there's a blog post that we did about the best places to buy Airbnb properties. And 2 years ago, we did the best places to kind of rent Airbnb properties. So we give a lot of good tidbits of information there. Where are the best top 25 markets? And so, using that as kind of your compass to direct you to, I think, great cities. And then using this tool to really get to the best zip codes and the best types of properties, I think is the best way to think about this. If you're thinking super high level, where do I start? Go to that blog post, read into that, and then pick out a few cities. And then use this tool to kind of identify the exact types of properties you think are going to perform the best. So a good question here, obviously regulation, regulation, the stumbling block for me to make this, purchase. Can you address this concern? Sure, yeah, happy to. I think as an investor in this kind of industry today, regulation needs to be one of the things that you're studying very carefully in how you go about this. Where to start? I think that it is quickly evolving in every single city. And while we wish we could provide more, real regulatory boots on the ground coverage of what's happening, the reality is that there's, thousands of conversations happening every day. And we realize that we couldn't be that provider of the regulatory battles going on in every single city. So it's definitely a piece of homework that you have to do. Once you identify some great markets, do the regulatory homework. Or vice versa, do the regulatory homework and then go to look at which of those markets is performing well. I could kind of go on and on about where I think this is going to be. And maybe I'll just make a couple comments on that real quick. I think you're going to want to stay out of these kind of number one, these top tier cities, right? We're talking about the San Franciscos, the New Yorks, Chicago's of the world. They grew fast, they grew early, regulation is happening there. There's real concerns there, or they say there's real concerns there about affordable housing and other things. And where the best opportunity now is really in tier 2 cities. Cities that still want tourism, people that still are fostering entrepreneurship, people that haven't had a crazy, ridiculous run of real estate valuations lately. These companies want tax revenue, they want tourism, and these people are going to be much less likely inclined to, one, pass regulation, but two, and even more importantly, is enforce those regulations. So I think, when I'm thinking about investing these days, I'm really trying to find out the secondary markets where this kind of risk of regulation, I think, is much less than it is in some of these tier 1 cities. Just looking for another question here. I'm going to probably just take 1 or 2 more questions, and then we will end this webinar. A question for renting to rent. Would you target large houses or multiple 2-beds? It's a tricky question that has kind of lots of caveats to it. Typically, I'd rather run one property than multiple properties. Obviously, one property that would generate more revenue would be better than 2 properties that generate half that revenue. typically from an operational standpoint, from the cleanings, from the headaches, from the check-ins, from just the general maintenance of a listing and a vacation rental property, I'd always err towards more luxury and larger properties. So, a lot of people go for scale, but scale comes with major headaches. Major headaches, just more guests, more people, more wear and tear, and it's just a little bit more tricky to manage. If you're not looking to do any sort of the day-to-day management, looking to outsource it, then sometimes going for scale at smaller properties can be the best way to go. It really just depends on the market that you want to get into for rent. I think typically, bigger is better. Go more sizable rental and a little bit more luxury. Here's a good question. I'm thinking about buying in a seasonal area. I'm looking for insights into that opportunity. Are markets like this different to analyze than traditional markets using these tools? It's a great question. Thanks, Dan. I think most people are trying to avoid super seasonal markets, right? Like ski towns and lake towns and summer destinations. I think that there's still a lot of opportunity in those markets. You just have to know exactly how is this market going to really die? Does it fall off a cliff, or does it kind of trickle down into the winter time, or whatever kind of your off season is? I think typically people don't want to be paying, you don't be losing money, in some months and making a killing in other months. They really want to kind of a nice business that makes money month to month, right? They want to kind of like even out that income over time. For understanding seasonality, that market minder tool is going to be your best option to really understand that, how much more you're making in August versus January. Is it even going to make sense to open your doors in those months? And so it's a tricky one to answer. Like I said, every market is a bit different. So I think Market Minder, there's a seasonality tab in there that will really give you a great estimate of exactly what your shoulder season is, peak season, off season, and kind of does it make sense to operate this as a year-round rental. In Investment Explorer, we're annualizing everything, right? So there's no really month-to-month trends in our high-level revenue potential numbers. So, seasonality really shouldn't be a huge impact. It's just, it's an annual number. So there's going to be some highs and lows throughout the season. All right, one more question, and then we're going to jump out of here. So, Cara, how do you determine gross profit versus revenue potential? Sure, great. And this should be something that everybody should know. So revenue potential, again, is what we think a property would earn if it was a full-time vacation rental property. So this is a total revenue number, no cost associated. The gross profit number is then subtracting what a property costs just for the mortgage and an annual mortgage payment for that property, or for what the rent costs for that year. So the gross profit is thinking, what is your revenue minus your mortgage or rental cost, and then what are you left over with to operate and put in your pocket at the end of the day? So that's the difference between those two metrics. All right, guys. Well, I guess that's it for today. We're going to try and do a lot more of these webinars in the future. I really appreciate you guys joining me today, and hopefully you'll meet me on another session here in the near future. Thanks a lot, guys.